I'm attorney Kelly Longtin from Kelly Longtin Law, and today I want to talk to all of you about choosing a gift to give to charity. Now, if you're considering making a donation to a public charity, then you're not limited to just donating cash. So depending on your financial situation, your giving objectives, and the needs of the charitable organization, certain accounts or pieces of property may actually be better suited for the donation to that charity. Well, of course, you can always give the gift of cash. So writing a check to your favorite charity is just the fastest and easiest way to make a financial impact. In some instances, you may be writing a check as part of your weekly donation to a church, in which case you can count the entire amount as a donation to the church. On the other hand, you may choose to attend a dinner sponsored by a charity, and in that case, only a portion of the purchase price would be eligible for the income tax deduction. Now, in these circumstances, the amount that you have paid to attend the dinner needs to be reduced by the amount of benefit that you've received, for example, the cost of the dinner. Now, the remaining amount will be deemed to be the charitable contribution. Now, most of the tax-exempt organizations that host these types of events print the cost of attendance and the amount that is considered a charitable donation on the ticket or the advertising itself. Whether it's the entire donation or a portion of it, the amount can be deducted from your income tax for the year the gift was made. Now, for most cash donations to a charity, the total amount that can be deducted is limited to 60% of your adjusted gross income. So let's talk about appreciated property. And one of the major benefits of donating appreciated property, such as either publicly traded stocks or real estate, to a charity is avoiding the capital gains tax that would otherwise be due upon its sale. If you were to sell the stock or real estate and give the cash to a charity, you would first be required to pay capital gains tax on the increase in its value from the time you purchased it to the date that it was sold. However, if you donate the property to the charity and the charity makes the sale, it will not be required to pay tax on the capital gain. Additionally, giving the stock or the real estate to the charity means that it actually will receive more value, since there will be no reduction in the donation due to the capital gains tax. Lastly, when making a gift of appreciated stock or real estate that you've owned for more than 1 year, you're able to receive an income tax deduction in the year that it was donated equal to its fair market value. If you're donating appreciated property that you have owned for less than a year, the value of your donation is limited to the fair market value of the property at the time of the donation minus the amount of growth or the appreciation, otherwise known as the cost basis. Now, be aware that the limit for donating appreciated property to charities is 30% of your adjusted gross income. Now, while this option is a great way to reduce your taxes, it's important to do your research to make sure that the charity to which you want to donate accepts these types of donations. Now, some small organizations may not have an efficient way of investing or managing or selling appreciated property and would actually prefer that donation be in cash. Let's talk about retirement accounts. If you're currently 72 years old or older and you want to donate money to a charity, you may have the ability to make a qualified charitable distribution from your account to the charity and avoid paying income tax on the distribution. If you take the required minimum distribution and then donate the money to a charity, you will be required to pay income tax on that required minimum distribution, especially if you do not need the required minimum distribution. A qualified charitable distribution really just makes sense, as it's going to satisfy the requirement that you take that annual distribution that you're required to at that point, and allow you to support your favorite charity and enable you to avoid paying income tax on that distribution. However, it is really important to note that a qualified charitable distribution does not qualify for an income tax deduction because the distribution is not included on your income tax return as income to be taxed. Now, another way that you can donate your retirement account is to name the charity as a beneficiary so that after you die, the retirement account is given to it. Now, regardless of who receives distributions, whether it is you as the owner or a person that you designate as a beneficiary, each distribution is subject to income tax. By donating the retirement account to a charity, it's able to use the money without incurring any income tax liability. Now, although the retirement account will still be factored in computing any estate tax that could be owed upon your death, your estate will receive a tax deduction that can help offset the estate tax that's owed. Additionally, since the charity will not have to pay income tax on the distributions from the inherited retirement account, it will receive a larger benefit from the account than an individual would have. Now, giving to your favorite charity is not only beneficial for society, but also for some potential tax benefits for you as the donor. With many options available, we are always here to assist you and your financial team in developing a strategy that will be beneficial for all of the parties involved. So if you need assistance with this, please give us a call today so we can discuss your charitable goals and get you on the path to help you leave a lasting legacy and just make a difference in the world. So I hope you found this beneficial. If you're interested in donating to charities or just understanding more about how it works, I'm attorney Kelly Longtin from Kelly Longtin Law, and where we focus solely on estate planning and how you can leave a legacy of love. So if you have any additional questions, please feel free to reach out to us. Thank you.